All right, so let's go ahead and get started. Oh, Sue from Miami, my neighbor. Let's go ahead and get started. Welcome, everybody. Thank you guys so much for being here. For those of you who do not know me, my name is Shawn Weaver, and I am with Creative Staffing. I am also on the board of directors for the Florida Staffing Association and the social committee chair for the South Florida region. And we are just continuing with this FSA train that we've been driving for the past 10 weeks, and we're going to continue. We have great content, especially today, and we're going to continue with the great content through July, so make sure you check out for any future things that we have coming up. We're having a lot of fun with this. It's great to come out to you every week and say, you know, we're here for you, what can we do for you, and bring you the latest topics that are, you know, around us today and what's going on and what we can do for you. I'll go ahead and next week, July 8th, we've got another great program at 2 o'clock. It's about closing deals in a socially distanced world. And that's brought to us by another one of our great FSA industry partners, Aviante. So I wanted to throw that out now just in case people drop off before the end. Check that out. I believe an email blast was sent out, so please go ahead and register for that because that's some great content as well. So what do we have for you today? Well, we have everyone's favorite topic, insurance. And although it's not a fun topic, it is an extremely important topic right now because like every other area in staffing right now, there's a lot of changes. There's a huge impact because of the pandemic and what's going on now. So we have one of our industry partners and a great supporter of FSA, Assurance. And with us today, we have two wonderful insurance experts, Ryan Light and Scott Ravenesi, with us today. And basically, what can we do? Where are we at right now in the world of insurance? How can we reduce costs? What should we be doing? What does the landscape look right now? Are there adjustments that we can be making right now or in a couple of months or by the end of the year? And unfortunately, if this should happen again, what can we do to prepare for it? So they have some great content, some great information, and I think it's something we all need to prepare for. And of course, if you have any other questions after or during the program, just go ahead and drop your questions in the chat box, and we're going to get to them at the end of the program. And so I'm going to send it over to you, Ryan and Scott. Thank you so much for being with us today.
You bet. And thank you. And thank you. I want to say thanks to the association and the board for giving us an opportunity to do this. As Shawn mentioned, my name is Ryan Light, and I'm joined by my associate, Scott Ravenesi. So just a quick level set on who we are for those of you that don't know us. We're a commercial insurance broker. We're part of the Marsh McLennan family of companies. We live inside of the staffing industry. So we've got 600 plus staffing clients across the country, and we've been involved in staffing for 25 years. Well, the reason that's important right now is the fact that the stuff that we're about to talk about, we are seeing the struggle in staffing nationwide, real time across our client portfolio. So what we wanted to do today in terms of an overall agenda is give you a sense for the 5 most common questions we're getting right now from our clients. We'll give you a perspective as far as what carriers are doing or should be doing to assist you as a policyholder. Then we're going to also discuss, besides your typical work comp and staffing package policies, what else is actually being affected by COVID. Fair warning, that section's kind of a bummer, but I'll try and keep it light for you. And then last but not least, we want to give you a preview of what's to come into the future and how we can really expect to go forward. So with that, I'll turn it over to Scott.
Yeah, thanks, Ryan. Thanks, Shawn. As you can probably imagine, we've gotten bombarded with questions insurance related since this virus came out. So I put together a list of the top 5 questions that we're hearing from our staffing clients. They're going to revolve around losses, your experience mod, as well as classification of payroll. And also, if you do want to get into the COVID or the virus, I guess, industry, how should you approach that? How should you approach that from a classification standpoint, as well as your carriers too? So to start off with, we'll start off with the losses. And this is probably the most common question, guys, that we have been getting. Will claims related to COVID-19, actually, Ryan, can you back up? Actually, this is
Did I miss one?
missed one.
There we go.
Yeah, so this is the most common question, sorry. So this question is COVID-19, is it insurable under work comp? And my favorite answer is maybe. It depends on the state, and it depends on the job function of what your employee is doing. So for example, I mean, everyone knows that most of insurance policies have a virus or pandemic exclusion, and that hasn't changed. Almost every single insurance policy has that exclusion on there. So that's why you're seeing a lot of rejection on a business income, which Ryan's going to be talking about. But from a work comp perspective, again, it depends on the state that you're in right now and what your employee is doing. So again, as the slide reads, most state statutes exclude common colds or just relatively, everyday type sickness, which this is classified as. And so Florida's specific ruling, and again, this changes on a daily, even sometimes an hourly basis. But right now, Florida's laws state that employers must require work comp coverage to be provided to public servants, people on the front lines of COVID, so such as first responders and healthcare workers. So right now, those people are getting coverage. However, as Ryan's going to talk about a little bit more, we recommend that no matter what the case is, you file a claim regardless. So regardless if the employee says, hey, I got it from a brother or sister, or if they tell you, hey, I did think I got it from work, you should be filing a claim because these laws could change at any minute. So that's what we recommend. Brian, if you could go to the next slide.
Yep.
So let's say you do have a loss, and it is, the insurance company does pay out. A lot of questions we've been getting is, does that loss go towards my experience rating? So NCCI develops your experience rating, and as you know, guys, this is a huge factor in determining your premium. And so this is pretty black and white. The answer is no, that loss will not impact your experience mod. So NCCI stated that, pretty quickly that any loss that has to do with COVID-19 will not go against your experience mod. And so again, that's one of the reasons why we tell you or recommend to file a claim, because it really is not going to have any impact on your premium or your loss history since it's going to be excluded. Next one, Ryan. Yep. This one has to do more with, sorry, just going through my notes here. As you can see the question, a business has suspended their operations due to COVID-19, which obviously a lot of companies have been doing, but you still continue to pay your employees as if they're still working. Does this payroll count against my premium or my NCCI experience mod calculation? What NCCI did, guys, was create a whole separate class code for this specific example. So if you're paying someone, but they're not working because of COVID, there's actually a new class code that's, you can see there, it's 0012. I thought it should be 19 just to make it easier, but for some reason they've picked the number 12. So any payroll that you have that you're still paying your employees, but they're not working, should be classified as, you can see, code 0012. And again, guys, that will not go towards your experience mod. And this one has to do with classifications. And before I, get into the question, everyone should be keeping track pretty thoroughly of, again, your losses that you have to do with COVID, as well as what we just talked about in the last slide, your payroll. So if you're paying someone, even though they're not working, you need to keep track of that, because I'll tell you what, come audit time for all of our clients and all of you, I think it's going to be a little bit of a nightmare if you're not keeping track of this, because you're going to have to go back and say, hey, which one of these employees and for how long was I paying? Are they not working? What's the class code do I use if someone's just, they go from the warehouse setting to now they're just working from home? How do I do that? And so again, guys, I can't stress enough, just keep track of everything you're doing, especially in this virus. And so the question that we've been getting is, as an employer, you have some limited operations due to COVID-19. As a result, some of your temps are working in positions that they normally weren't. I would say in those scenarios, consult your broker, consult your carrier, because they're most likely going to change. If you're using a warehouse code and now all of a sudden all they're doing is clerical duties or working from home, take advantage of that, because that rate for a warehouse worker is 10 times more expensive than just the clerical rate, which is 30 or 40 cents per 100. So again, that's why we say keep track of this, especially if your positions are, sorry, I just saw a question here, but if your positions are changing, keep track of that. And I can't stress enough, rely on your broker to tell you which class code to be using. This question revolves more around, hey, if I want to get into temperature reading of employees as they walk through the door, or hey, I want to get into some janitorial services of, wiping down an office or cleaning ductworks to make sure when people do go back to work that it's a safe environment. My first thing that I would stress is make sure that's okay with your carrier. Because what Ryan and I are finding is not a lot of work comp carriers want to take on this COVID exposure. And so it would be very unfortunate if all of a sudden you're doing some janitorial work where there's a COVID exposure, temperature reading, and God forbid something happens and the carrier says, well, we had no clue you were doing that. We don't want any virus exposure, and they don't cover that loss. And so again, before you get into any type of virus-related jobs, just double check with your carrier that they're accepting to that, because you'd be surprised. I mean, I shouldn't say surprised, but a lot of carriers don't want anything to do with this for obvious reasons. And so as far as the temperature readers, because that's what Ryan and I are getting the most questions about, hey, we have a client that wants us to, you see this, people, they're checking people's temperatures as they walk through the door. We recommend going with the governing class code of that client in that case. But again, I would double check with your broker and your carrier to make sure that they even want this exposure. Ryan, do you have anything to add to that?
Yeah, one other thing I would add is before you approach your carrier and say, hey, this is something we're considering doing, we have a job order, we're ready to go, make sure that you've got a document put together that you can share with the carrier that says, look, this is our PPE, these are going to be our standards at the client site, this is our distance, this, really have it thought out instead of just making the request, because carriers are pushing back pretty hard against that, because when business dried up generally for people in staffing, a lot of people did quickly pivot to this that had no experience in healthcare, right? And so carriers were stiff arming a lot of those requests. But we find that, the more thoughtful you are in your ask of the carrier, the better chance you have to get it actually approved.
Yeah. And Sean, I did take a look at the question that was asked about a work. Can I address that now, or do you want to wait till later?
Well, since it came up we'll just go ahead and address it now. Sarah asked, are we filing a workers' comp claim even if it is unclear if the employee was exposed to COVID at the work site?
I would say yes.
Yep.
I would
The
say
carriers
yes.
want you to.
Yeah. Sorry, go ahead, Ryan.
Yeah, I was going to say the carriers want you to. They want to know about it early so that they can do their investigation and make a determination of it. Candidly, what carriers see most right now relative to COVID on work comp is for report only. So, hey, we don't know if this is work related or not, but we're making you aware of it, right? That way you're on the record with the carrier. You can't run into trouble with a late report. And carriers have been training up the adjusters to be able to do the right type of investigation to determine whether it's compensable or not, depending on the state and the rules in play at that moment. So yeah, turn them in.
Turn them in. And that's, again, guys, why NCCI ruled that these losses aren't going to go towards your experience mod. And so don't fear, hey, I'm going to file this work comp claim. Now I'm going to get hit with a huge increase come renewal time. That's not going to be the case at all. Trust me. These losses are not going towards your experience mod or your premium calculation. And then finally, this is from the Business Insurance article, and this is just the financial impact just in the work comp industry. And so the Business Insurance Journal is predicting this is going to cost the work comp industry upwards of $80 billion. And so the reason why we tell you this is because for the past, I would say 3 or 4 years, we have seen rates actually been dropping on the work comp side of things. And you've probably seen that as well. Your cost for work comp should have been going down, all things being equal. But when something like this happens and it's going to impact the marketplace, $80 billion, don't be surprised in the next year or two if all of a sudden your rates start going back up. Again, the last 3 or 4 years, they've been going down. They're going to come back up in the next year or two. So don't be shocked by that. And then going on to my next part of my presentation, what are carriers doing to help you guys out through all this? And to be honest with you guys, carriers are being very flexible right now. And so don't be afraid to be asking for favors. They're as much of a partner in this as your broker is. And so here are just a couple things that liability carriers are doing to help out, the staffing industry or just, their clients in general, no matter the industry. But a handful of staffing carriers are giving back 30% of premiums on the liability side of things. So let's say from March 15th to June 15th. So let's say your premium during that time is $10,000. For those 3 months, carriers would be giving you a credit back of $3,000. So I would, again, approach your broker. That is very state specific. I know for sure California, New Jersey, I believe Illinois are some of the states that are doing that. I'm not too sure about Florida, but I do know a bunch of people have business in other states on the call. And so just double check with your carrier to see if your carrier is giving you credit for that portion of premium. Another thing to keep in mind is liability policies for staffing firms are non-auditable. So meaning, if you put down $10 million in payroll and you only do $9 million, it's not like work comp where you're going to get that $1 million delta back. So it is kind of what it is when you send in your projections, but carriers are making accommodations. If you have a dramatic decrease in payroll, tell your carriers that. I wouldn't, again, if you're a $10 million staffing firm and you go to 9.5 million, they're not going to do anything. But I mean, if that gets cut in half, you go from 10 to 5, definitely worth having the conversation. And Ryan and I have had success having carriers accommodate that and giving you a credit in your premium. The next one is when warranted, again, similar to what I just said, we recommend filing a business income claim. Regardless if, You know, most of these are being denied, but all it takes is one state, one lawsuit where someone says, hey, this is now going to be covered. And if you have your claim in already, more than likely it might be at the top of their list. But if you're filing the claim 3 months after the fact, it's not going to be covered. So again, when warranted, we do recommend filing a business income claim. Ryan will touch on that in his portion. And right now, carriers are being very generous on payments and cancellation notices. And so if for some reason you can't make a payment because, you know, your business is just down, you can't collect on your receivables, carriers are kind of backing off on cancellations right now due to non-payment. Now, you can't go a whole year without paying your premium. You know, there has to be some type of agreement in place. But again, if you're caught in a situation where payments are tight and you can't make the full payment, work with your carrier on that. You'd be surprised on how accommodating they're going to be. And then my last point, new business is very tough right now. So if you're a company looking to get alternative bids, I'd say, first of all, start off way early. Ryan's going to touch on that. But right now, there's just so many unknowns that carriers just kind of want to stay put right now. They want to renew their good clients, get rid of the bad, and just kind of stay status quo until this thing plays out. So I just warn you, if you are going out to bid, do it early. And they're going to ask a lot of questions. That's one thing that we've experienced. I mean, they're going to come and throw the book at you. So just be prepared for that. And then my last slide here, from a work comp perspective, that was the liability carriers. From a work comp perspective, moving to a monthly reporting or a pay-go plan is kind of a no-brainer right now. And what I mean by that is, you know, some companies are still set up on the, you know, the typical installment plan. So if you, let's just call it, your premium's $100,000 in work comp and you have 10 installments, you're paying $10,000 no matter what throughout the year. On a pay-go plan, you actually report payroll every month and pay on that. And so if your payroll, let's just say it's zero, you don't pay that month. And so it gives staffing firms a lot of flexibility in terms of cash flow, because people are down right now in payroll, so you shouldn't be paying the full amount if you're only doing half of what you kind of projected to do. So I would go and ask your carrier if they have a pay-go plan available. If they don't have a pay-go plan available and you are on that traditional, what I call installment plan, ask your carrier if they'll make accommodations. You know, if you projected your payroll to be $10 million, and through all this, it went down to 5, ask your carrier to make adjustments. Again, I think you'd be very surprised how accommodating they're going to be. Our third point here, as you can probably guess, if there's anyone on this call that's in the healthcare or medical staffing space, you're going to have a hard time finding options come your renewal. As you probably guessed, not a lot of carriers want to get into the healthcare and medical space for obvious reasons. And so a lot of them are just saying, hey, right now, any healthcare or medical staffing firms are just, we don't want them right now. Don't even send it to us. So again, if you are in that sector, get way, way ahead of your renewal. And that's the best advice I could give to you right now. And we talked about this earlier. Your next work comp audit should be conducted with your broker's assistance. With these new classifications of the 0012, which is the COVID code, as well as, hey, you know, now my employee is working remote, or now they're working clerical, you need your broker's assistance to make sure that you're using the correct class code in the correct time frame. So just when audit comes, consult your broker on the past year, how that should work. And then finally, some carriers right now are asking for a pandemic response plan. And so to my point earlier, you're going to see a lot more questions from underwriters come your renewal and even new business. And so again, Brian's going to talk about that in a second here. Just get ahead of your renewal. We can't stress that enough.
Thanks, Scott.
Yep.
So this is this presentation is kind of got a Jekyll and Hyde kind of flavor, is the way I would describe it, because on the front end of the presentation, you know, as Scott discussed, the carriers are being pretty fair and engaging with the client base and in it together kind of attitude relative to, you know, your workers' comp, your general liability, some of the core lines of business that most staffing firms have. What's not happening is that's not happening on other lines of insurance. And admittedly, I'm going to give you some less than favorable news about some stuff that's happening, but it's important that you know how COVID is impacting some other segments of the space. So I'm going to start with directors and officers liability. I'm sure most of you on the call probably have this at some level inside of your program. What was happening with directors and officers liability was the fact that, you know, even before COVID, we saw that segment of insurance start to stiffen up from a pricing standpoint, from an appetite standpoint. Now, bring in COVID and a worldwide shutdown, and carriers are losing their minds. Carriers have significant concerns surrounding the solvency of privately held clients. So unfortunately, right now, we're seeing average rate increases at 15%. Even more troubling, though, is we're also seeing carriers pull back on limits. So if you had $5 million in limit this current year and you approach your next renewal, it is possible, depending on your financial statements and some other factors, that the carrier won't reoffer that same level of limit, and they'll actually pull your limits down. The other thing, and you'll hear this, you heard Scott say it, and you're going to hear me say it multiple times, get started on your renewal early. And the reason is carriers are making last-minute underwriting decisions. So for your lines of coverage like directors and officers liability, employment practices liability, each year, more often than not, the carrier sends you what's called a conditional notice of renewal, which basically says, hey, we intend to give you a renewal, but we're not sure that we can because we don't have all of your information yet. And the reason you get that letter is because that allows the carrier the ability to decide, ultimately up to your renewal date, whether they want to give you a renewal or not, okay? So there is a possibility that you get left holding the bag with no coverage at the time of renewal if you don't get started early. Another point is, you know, historically, if you look at the insurance marketplace, it goes up and down in terms of its cycles. Some cycles, the underwriters are told to, you know, grow the business as much as possible. Don't worry so much about profitability. We can win at scale. And then you go into these hardening markets where it's like, hey, we're not worried about market penetration anymore. We want profitable business. And that's where we are today. So carriers are really looking very closely at the risks that are presented. Now, for those of you that have been buying coverage for a long time, you know the typical routine, right? You reach out to your broker, you strategize on where you want to go in the market, you provide them with some data, they send that on to the carrier, and the process begins, right? This year, you're going to have to do more work than you've probably ever done in terms of securing your insurance. Number one is you're going to have a story to go along with the submission of your financials, unless your financial statements are gleaming. But the reality of it is most of us have got a gut punch in the financials this year, especially in staffing, right? So there has to be a story around, here's what happened, here's what we've been doing to mitigate you know, the bleeding, and here's our plan for go forward. This is what we think our estimates are going to be. You got to have a dialogue going around your financials. And I will tell you that automatically, if you have short-term liquidity issues, which many in staffing do, or you're on the precipice of needing to do debt refinancing, it automatically kicks your risk in the eyes of a carrier into a distressed financial risk class, and it dramatically impacts your D&O ability to secure D&O coverage at a reasonable rate. More bad news. Under the employment practices liability, which is a very important coverage for staffing firms, right? You got people all over the place. And That line too was already under significant pressure pre-COVID in staffing in particular. So here again, we're seeing average increases at the 15% range. Not to say that you're going to end up there, but that's a pretty typical offer from a carrier right now. On the EPL side, we're also seeing carriers demand higher retentions. Historically in staffing, depending on the size of your operation, a typical employment practices liability retention would be about $25,000. We're seeing it go to 50, 100, 150 in some cases. So that's pretty dramatic. So that's loss that you're going to retain. Scott already touched on this, but you can expect an awful lot of underwriting questions around what you did throughout this process. And the reason they're asking those questions is because that the environment today is absolutely ripe for significant employment practices litigation. I read just recently that so far, COVID related, there's been 2,000 lawsuits filed as a result of COVID. Now think about that. That's 2,000. We're still in the midst of COVID, and a lot of the courts have been closed for a long period of time. So we expect massive litigation, unfortunately, and that's just the reality of it. There's also civil unrest throughout the country. People are upset about a bunch of different things. And so you add that anger and angst and uncertainty and people having to go months without pay or reduced pay. It's a really difficult time for people. And in those situations, we often see litigation skyrocket. The other thing I will tell you, as you return your employees to work, understand you run a significant risk of a discrimination claim. I'll give you an example. So imagine that you're trying to be wise and say, oh, I've got somebody who's in their 60s. And we have been told that COVID impacts those that are older in age than it does the younger generation. You can't deny that 60-year-old person who wants to come back to work access to come back to work because you're afraid they might contract COVID. You also can't kind of pick and choose your best performers and bring them back. What I'm trying to explain to you right now is if you have an employment attorney, now is the time to work with them to understand and build a plan on how to bring your folks back to work, because this is a scary, scary proposition right here. Cyber liability, I think a number of you on the call likely already have this. We've seen cyber liability be something that's been bought pretty regularly inside of the staffing industry for the last few years. The good news is that cyber liability is actually a stable market right now. I say surprisingly because the loss activity is through the roof. Since COVID happened, they're seeing a spike of 6 times normal in terms of cyber-related events. So there's 3 primary types of losses that we're seeing if you put them into buckets. The first one is cyber ransom, which is somebody gets into your system and locks it up. You're not able to generate invoices. You're not able to look at client files, et cetera. You are completely locked out. And you have to pay the cyber hacker money to release your system. Or if you have a backup, go and shut your entire system down and rebuild it. Obviously, there's cost involved there. Social engineering is a brutal loss. It's happening all the time. And that's where somebody essentially tricks you into doing something electronically in terms of like wiring money into an account that you think is a legitimate account, that you're paying something, and it actually goes into a sweep account. And then as soon as it hits that account, it's off into the abyss and you never get that money back. I just wrapped up a claim for a client of mine that was in excess of $1 million as a result of something like this. And then invoice manipulation is a scary one, especially for staffing firms, because what happens there is the hacker intercepts the invoice that you may be sending to your client and changes the ACH routing information for where the remittance should be sent to. So the client pays you, or they think they pay you, that they've actually paid the cyber thief. So now your client's actually out the money, right? They've paid you as far as they know, and you didn't get the money. So those are the 3 big ones that we're seeing on a regular basis. And then of course, based on your industry and what you do, you certainly have a lot of personally identifiable information that's valuable on the black market. And so hackers are still out there trying to access that information and steal it which could generate significant costs for you in terms of notification costs and penalties and that sort of thing. So I would tell you this, if you do not currently carry this coverage, speak to your broker and at least evaluate it soon. And the reason I make that point is right now, like I said at the beginning, cyber is still a stable market. There is capacity. You can buy it fairly reasonably right now, and you'd want to have the coverage now so that as the market spikes, it'll cost you less over time than if you wait to buy in when the market goes through the roof. Okay, so credit insurance. This historically is not a high percentage purchase in staffing, right? We don't see a large percentage of staffing firms buy it, but there is obviously a high interest in it now. So two things I would tell you about credit insurance, and here again, it's just another thing to talk to your broker about, is evaluating this coverage. You look at it for two main benefits. One, obviously, in the event of a default of one of your customers, you get recovery, right? No brainer. That's why we look at credit insurance. But what a lot of people don't realize is there's an added benefit to credit insurance, which is the carrier and the resources they have actually become an extension of your own internal credit department. So credit insurance carriers have access to mountains of data on privately held, publicly held organizations, and they can help you make very wise, thoughtful credit-based decisions on what type of terms that you want to extend to your clients. So it's a nice value add that most people don't even think about. And given how unstable and unpredictable the environment is generally right now, it's a pretty good product to take a look at because it's really hard to take a bad debt loss in the midst of an economic meltdown on top of it, right? So there are all sorts of flexible program design structures that you can do and lots of different nuances you can build into the program. So it's not like you have to insure the entire client base either. You can isolate it down to a handful of clients. So there's a lot of different things that you can do to carve that up to make that work for your unique situation. Okay, business interruption insurance. This is the one that obviously makes the news on a regular basis. And there's a lot of anger in the industry at large that carriers have declined to provide coverage for business interruption. Because as a business owner, you're sitting there and you said, my business is interrupted. Like we're shut down. How is that not a business interruption loss? It's not a business interruption loss because of the conditions inside the policy. Most notably, almost every policy has a standard virus exclusion. Now, as Scott said earlier, there is a tremendous amount of litigation that's going to happen as a result of these denied claims, right? So there's a possibility that some smart attorney is going to find a way to flip this on its head, and perhaps there would be coverage, which is why we advocate to at least make your carrier aware that you believe you had a business interruption loss. All they're going to do is deny it, and at least you're on the record, right? So COVID shined a really bright light on what happens when you actually do have an interruption in operations. And so what we've historically seen is staffing firms, you don't generally have a high business interruption risk for your offices, for your headquarters and your branch offices, because you can, if a facility goes down that you're working from, you can go into co-working space with your laptops and continue to serve because you make money off-site, right? What often gets overlooked relative to business interruptions specific to staffing is the possibility of having what we refer to as a contingent business interruption loss. And in that scenario, imagine you've got a key client or a couple of key clients, and there's 100 temps there. And if that client went down from a normal peril, so fire, tornado, wind, flood, whatever, if that facility shut down, you're going to be out of revenue until that facility's back up. Revenue that you couldn't quickly replace by just adding additional deals, right? So there is a way to go out and ensure your exposure to that type of loss where it's at a off-site location, not something you own, but you can insure a client site for business interruption. And I bring that point out today just so that as you're looking at your client portfolio, if you are heavily concentrated at a particular client, this is something you should be taking a look at, just to hedge your bet. Okay, so moving forward, what can we expect? Here's what you should expect at your next renewal. And some of this is redundant intentionally because we want you to hear it multiple times. You can expect much greater scrutiny. You're also going to see in certain lines of coverage, way less flexibility on terms, pricing, and coverage on the lines that I just covered. Rates are on the rise. We're also seeing carriers make decisions to get completely out of certain sectors of staffing based on the dynamics that are happening in the industry. And carrier appetite is literally changing rapidly. Day by day, we see different carriers making decisions on what they want to do go forward. It's frankly hard to keep track of. So knowing all of that, here's our baseline tips on how to increase your chances for a favorable renewal. Here again, go early. And number one is go early and get an indication from your current carrier. You heard Scott allude to it earlier. I'll tell you again, if you've got a good carrier placement right now, you're happy with that carrier, your best bet is to stay put. But in order to stay put, you're going to want to know early in the process whether that's the plan and whether the carrier is agreeable to that. Because if the carrier is going to hit you with a big increase and or non-renew you, you're going to want to get out early, right? I put meet in quotation marks because we can't do much face-to-face right now, but you certainly could do a virtual visit and your broker can help you set that up. Do a virtual visit and meet your underwriter. Tell your story from the business owner perspective. Tell them what you've been through, how you've navigated it, what your future plans are, and answer any questions that they may have. I promise you this, I've been doing this for 20 years. An underwriter that has met a client face-to-face has a much harder time pushing through a significant increase than one who's never met the client. And a lot of folks fail to do that connection, but I'm telling you now, it's important, and I would encourage you to do that. Next piece is you absolutely have to build a compelling submission to the marketplace. You know, if you've been doing this for a long time, it gets kind of rote, right? Each year, 90 days before the renewal, you put together some documentation, you fill out some supplemental apps, and it's off to the carrier, and you wait until you get your pricing back, and there's some, a little bit of dancing at the end, and that's it. You're going to have to go farther than supplemental apps and your normal submission documentation if you really want to have a chance to beat the average increases that I'm talking about here. You're going to have to do some work. And again, you do that in partnership with your broker. And just to kick a horse continuously, start the process earlier than you normally do. In the event that it is looking like your carrier, existing carrier, is not going to be the play, don't just go to one other carrier. Go as broadly as you can, because you've got to create a competitive renewal process to have any chance of trying to improve on your rate position as you approach renewal. And then last but not least, this is such a difficult market. Just double check that you're working with a broker who understands the staffing industry, because the markets in this industry are changing very, very rapidly. Okay, so the last thing I want to kind of cover is how are we preparing as an industry for the next pandemic? And I won't belabor these three, but I will tell you that there are three proposals that are circulating about that are getting various levels of consideration. Prior to 9/11, we didn't have a federal backstop for terrorism insurance. 9/11 happened, proposals came together, and they worked it out, and TRIA was formed, and that's been in place since 2011, and it's a federal backstop. God forbid we ever have another terrorist event, there is coverage available for that. You see that happening now in the case of the pandemic, right? So there are programs being worked on. We expect, or at least we hope, by the time that we have another pandemic, and Lord help us, let's hope it's not anytime soon, that there will be an option, some coverage in place so that business owners aren't left holding the bag with denied business interruption claims because of no pandemic coverage. So it is being worked on. Have faith. Something will get put together to prevent the next meltdown that we may face. So I know the last half of this presentation is kind of a bummer, so I apologize. But I'll leave you with some good news. So hope is absolutely not lost. the staffing industry, and we've been involved with it for a long time, you have overcome a lot of challenges. For those of you that were around in 2008, it felt like the whole world was coming to an end during the financial crisis, yet you recovered. We look at the staffing industry with a lot of admiration for what you do. You truly are the tip of the spear. You're the first industry that feels any sort of contraction in the economic marketplace. And you're also a leading indicator for the economy in terms of recovery. So what you do every day, I hope you're so proud of what you do, because you are the lead charge back in terms of recovery. And with any disruption in an industry or an economy generally, there's always a silver lining, right? So I can tell you that for my non-staffing clients, they're asking me more questions about staffing resources than they ever have, because they want to make staffing more a play, so they have flexibility with the contingent workforce. For those of you that have butted heads with competitors for years, that you thought, how could they bid these jobs this low? They can't be making money. I guarantee you that this pandemic is going to thin the herd of your competitors. So the healthy competitors will remain, and that's good news for you. And then what was the one thing that staffing firms were talking about nonstop last year? I can't find talent, right? Unemployment was at 3.5%. There's 30 million unemployed people in the workforce, or out of the workforce right now. And so that talent you once could not touch is either available now or it soon will be. So hope is not lost. And I will tell you, tough times obviously create resilient businesses. And for those of you that are on the line, listening and learning, I give you kudos because you're using this as a process to navigate through some very, very difficult times. And I commend you. So with that, I will turn it over to questions.
Well, if we knew you were going to be such bummers, we would have never had you on this holiday weekend. Just kidding. No, but honestly, it's very valuable information, especially right now in this climate. Let's get to some questions. Sue has a question. Sue, don't know who allowed her on here. No, I'm just kidding. Sue said, in the beginning of this webinar, you mentioned if workers' comp covers someone out sick with COVID. I have spoken with a few staffing professionals and a few medical professionals and asked this, and the answer was that it's almost impossible to prove where the person caught COVID from. Even if they're a healthcare worker, they still could have caught it in Publix, etc. Is that correct? Thank you.
So, yeah, I'll take this one, Scott. So the reason that you see great disparity between whether COVID is covered or not in workers' comp at a state-by-state level is because of that very last point, which is it's impossible to determine where COVID was contracted, right? Could have been at work, or it could have been, at the grocery store on the way home from work. So each state has a different interpretation on how it works. So in Florida specifically, COVID-19 is presumed, meaning it's more plausible than not that they got it at work, and therefore the claim can proceed for healthcare workers and first responders. Counter that to California. In California, anybody that was deemed an essential worker, which is pretty much everybody, manufacturers, a broad range of individuals, basically anybody, it is presumed that if they were working, they potentially have contracted COVID at work. In Illinois, same deal as California. So there's great disparity across the states. Definitely check with your broker if you operate outside of Florida to know what are the nuances in each and every state, because they're widely different from one another. But you're absolutely right. You cannot definitively prove it. It's presumed, therefore, with the legislation, and they're kind of forcing it to be covered. And again, in Florida, healthcare workers, first responders. The reason we tell you to report it when somebody comes and says, I think I caught COVID here, is you don't want to make that decision on your own, right? Turn it over to the carrier and let the carrier and their expertise participate in deciding whether to deny the claim or to accept it.
Perfect. Thank you. Thank you so much for that question, Sue.
Good question.
Yeah, good question. If anybody has any other questions, go ahead and put them in now. I have a question just out of curiosity standpoint. You mentioned that you're seeing roughly around 2,000 claims. Is that more, and of course, obviously there's going to be more in the future, but is that more or less what you expected, or are you pleasantly surprised that there aren't more?
I think it's just tip of the iceberg. It's about what we would expect because it's early.
Okay.
Everything that I've read from industry publications and a variety of different sources, it's going to be an avalanche of litigation, unfortunately. You know, the culture that exists in the United States is highly litigious anymore, and it seems to get worse every year I do a lap around the sun. It just gets more and more litigious. So we expect there to be a large amount of activity. A lot of it baseless, but you know, there are firms out there, they'll take these claims on a contingent basis. It costs your employee no money to bring a suit, right? It's all done on a contingent basis. So, you know, there's certainly ample energy from plaintiffs' bar to go out and pursue cases.
Yeah, and Sean, just to add to that, right now I'm dealing, I think since this has started, I have 6 COVID claims that came across my desk. So I don't know if that's a lot. Ryan, I don't know what you're seeing, but out of my client base, I have 6 cases right now. So if that puts that into any perspective right now.
Yeah. Well, okay. We have another question from Jared. Given that the landscape of 2019 was heavy in losses attributed to non-owned auto and carriers, we're moving away from writing that risk. Will we see a return to that risk area and attempt to secure more business due to COVID?
Do you want to take that, Scott?
Yeah, you know what? I think auto is going to be an interesting play because as you guys have probably, like your personal auto, like I got credits back because no one's driving right now. So I'm interested to see how the auto landscape, especially in insurance, plays out because no one's been driving the last three months, which you would think means lower rates. There's not as many losses. But I can't say that with certain. That's just my only guess is we'll kind of see a rebound in that marketplace just because there's been so much less driving the past 3 months, but I could be wrong.
Yeah, that I would add that's just been a terribly unprofitable line of business for the carriers for a number of years. So it's 7% year over year average increases is what we see. Distracted driving, cars are more expensive to fix than they've ever been. So there's a lot of underlying pieces to this that drive that rate. I can certainly tell you that trying to place a driver in staffing remains very difficult to do. There's very, very few markets that want that driving exposure, and that does still remain.
Okay. Jared, continue with a comment. He said, I was warned in 2019 that most carriers were moving away. So I assume there could be a pause in that mentality for a while.
Yeah, no, I'd say that
Yeah.
the warning you got was fair because the appetite is very, very small. Less than a handful of carriers will even consider it.
Yeah, and some of the bigger losses, I mean, you could go to ASA or there's probably a $350 million and over auto claims that hit the industry pretty hard. I know the last couple of years, so.
Yep.
We have another question from Sue. Sue says, what is the average amount that cyber liability covers?
So hard to define because it's obviously predicated on the size of the business, the number of records that you store, some of your security protocols that you have in place. But if I just said like a baseline cyber policy in staffing today for $1 million of coverage would probably be somewhere, again, totally dependent on size of the organization, but somewhere between $2,500 on the low end to $7,500 on the upper end of that range for $1 million of coverage.
Wow. Okay. And let me check, see if we have any other questions because we're reaching that end of the hour. Oh, I think that's it. We got everybody. Guys, I can't thank you enough. I mean, this was really great information. And I know everybody's pretty bummed, but it's obviously important information. And I'm sure if anybody has questions, you are open to them reaching out to you. Your contact information is up on the screen. And just thank you. Thank you for being here. Thank you for everybody joining us. Big holiday weekend coming up. On behalf of everyone at FSA, please be safe. This is not the time to become experts in fireworks because it's not covered under workers' comp, everybody. I'm just kidding.
Right.
Everybody have a great weekend. Sarah, have fun in St. Simon Island. Let us know how it turns out. And again, we have great upcoming webinars coming up starting next week all through July. So please look out for the emails. You can also go to our website to check out all the upcoming webinars. And if you're not a member and you want more information on that, you can reach out to any of us. And there's also more information on the website. So I'm going to say thank you guys very much. Have a great holiday weekend.
Thanks for letting us present. Thank you.
Not a problem. Thank you for
Thanks,
being
everyone.
here. Take care.